Here are 6 reasons to sell a stock. Number 1 is you believe there's a better opportunity elsewhere, so you sell your current stock to buy another. Number 2 is something fundamentally changes about the company and you no longer agree with management's direction. Number 3, maybe the company's financials have been getting worse and worse over time. Companies usually go bankrupt when they have too much debt on their balance sheet that they can't afford to repay, so keep an eye out on a balance sheet. Number 4, the industry that company operates in is about to face tough times ahead. Number 5, maybe a huge competitor of a company that you own is about to steal significant market share. And number 6, management cuts their future expected growth significantly. And reason number 7 as a bonus is if you believe the company is overvalued. Comment any other reasons for selling a stock.
So when should you sell a stock? We always talk about when to buy a stock, but when exactly do you sell a stock? And there are 3 main scenarios where you sell a stock. Number 1, you realize you make a mistake in your analysis. So the moment you realize you make a mistake, and this is actually a significant mistake that affects your investment thesis, you should instantly sell because your investment thesis is no longer valid. Number 2, something significant changes about the fundamentals of the business and that causes it to no longer be a great business. Some scenarios would be like, for example, if the company suddenly takes on a very significant amount of debt, or the management does something that is misaligned, or maybe, for example, the competitive landscape changes such that the company is now unable to deal with competition. And finally, the third reason when you should sell will be if there's a very great business but it gets very, very overvalued and you see another better opportunity. Then in that case, it makes sense to sell and direct the cash over to the better investment. So yeah, hopefully that gives you guys a better idea, and also follow me for more investing tips.
Don't let the emotion of fear be a driver for your decisions made relating to the stock market. If you've invested in a wonderful business and done your due diligence, then selling because a dip in price is not the best decision. When the price of a stock goes down, many people become afraid and sell or cut their losses because they don't know why they invested in the first place. Don't be a speculator, be an investor.
Hey Jim, how do you know it's time to sell a stock?
Well, the classic way to know when it's time to sell a stock is called the 20% rule. If a stock has gone up more than 20%, you want to sell at least half of it because that way you can capture the profit. Now, there's a kind of a caveat on this. If the stock goes up 20% in less than 8 weeks, it's a good idea to hold it until as it goes higher. But if it takes more than 8 weeks, then you want to sell at least half of it to capture that profit.
3 reasons to sell out of a stock. Every single reason is going to be based on the fact that you own a business. Reason number 1, you no longer agree with the direction that the business is going in, or you notice something that might pose a problem for the business. For example, maybe you invested in Macy's and you saw, oh my God, Amazon is alive. Number 2, no longer agree with the management of that business. Maybe they're starting to do things that you don't like, i.e. IBM with buying back shares when you guys are in debt. And reason number 3, maybe you're trying to raise capital because you want to invest in another company and you just don't have enough money to do it. And you can take a bit off the top of a business that has been doing really well for you. For example, selling out of Tesla, you can invest in something small like Tattooed Chef.
This video will teach you when to sell your stocks no matter if you're a trader or an investor. First up is trader. This one's pretty easy, but it's also up for interpretation. Before each trade, you should always identify clear buy and sell prices for your stock, consider cutting losses if your stock is trading down more than 7%, and if you're a swing trader, consider taking profits after your stock is up more than 30%. And as a trader, you shouldn't be allocating more than 4% of your portfolio per trade. Now, this side is a bit more complicated. Understanding the opportunity cost by knowing peers or competitors, other industries, or even other asset classes like crypto, real estate, and trading cards is imperative. Assuming you're comfortable with the opportunity cost, as an investor, you sell your stock when the fundamentals deteriorate. This means declining sales, declining profit margins, declining cash flows, unable to execute against the operating strategy. A good example of this is Harley-Davidson. Their revenue, profit margin, and cash flows have all been declining from 2015 to 2019, causing their stock to decline almost 50% in just a few years.
You don't know when to buy and sell a stock? The RSI is a simple and easy tool to help you figure this out. To add the RSI to your charts, first go to tradingview.com. Type in the chart you are looking at and click Full Featured Chart. Click on Indicators and type in RSI to add it to your chart. March 2020, the S&P 500 fell into oversold territory with the RSI reading below 30%, signaling a buy, and soon after that we started climbing back into neutral territory. In late August 2020, the RSI was reading over 70%, signaling a sell as the S&P 500 was being overbought. soon after the S&P corrected back down into neutral territory. Leave any thoughts or questions below.
But take a stock we've sold of some sort. We probably had one view of the long-term competitive advantage of the company at the time we bought it, and we may have modified that. That doesn't mean we think that the company is going into some disastrous period or anything remotely like that. We think McDonald's has a fine future. We think Disney has a fine future, and there are others. But we probably don't think that their competitive advantage is as strong as we might have thought, as we thought it was when we initially made the decision. That may mean that we were wrong when we made the decision originally. It may mean that we're wrong now, and that their strengths are every bit as what they were before.
So to summarize them, the first point is you may want to sell if there's something better to buy, right? So maybe you own 10 stocks, for example, and you look at your portfolio, and some of them are fairly valued, and maybe you have one or two in your portfolio that are really overvalued, and then you see in another industry or something else is going on in the stock market where you see a really good opportunity, like maybe, for example, Johnson & Johnson, for example, they drop 50%. You're like, hey, I gotta buy that. It's a great company. It's super undervalued. So at that point, maybe you'll say, I'm gonna sell one of these stocks in my portfolio, and then I'm gonna dump the money into that stock. So that's kind of what Warren was talking about there. The other thing you may want to do is you may want to sell the company if the company changes the fundamentals. For example, maybe they deteriorate, the company's not investing properly, or maybe their CEO's making bad business decisions, he's not allocating capital properly. Those could be reasons to sell. Or the other thing could be maybe the company you own is going to merge with another company, so they might be getting bought out, and at that point you're going to get a premium if you own that stock and somebody comes and buys your company out. So that may be a good time to sell, because you can take your profits off the table. Or you could say, I'm just not interested in that company as a merger opportunity, so I like it better as an individual company, but I don't like that company as joining with. So that could be a sell point as well. So there's a few points, really. Maybe the industry as well is getting a little bit tougher. So some industries are starting to change really quickly and that sort of thing, and there's different competitive threats. So these are all things that Warren and Peter were kind of, if I was to expand on what they're saying, that's pretty much what they're saying. Yeah, so the other thing I would bring up is you may want to sell a stock if you're going to rebalance your portfolio. So sometimes one company in your portfolio is doing so well that it just, it starts to take over the portfolio. Maybe becomes, maybe you invested in Amazon back in 2010, and now it's, now it's 30 or 40% of your portfolio. So some people will look at that and say, hey, I got to sell some, take some money off the top, and then redistribute that money to another investment. So you could do that. Me personally, if you find a great company, I like to hold on to them and just keep riding it, and then as I make more money from my business, I take that money and then I just invest it into other stocks and try to dilute the the size of those shares. So I don't really like to sell if I don't have to, and it's just something to keep in mind. There's two different ways to look at it. The other thing you may want to consider too, as a lot of the traders out there, they use the RSI indicator and also the MACD. So they use those tools to figure out when to buy and sell stocks. And as a long-term investor myself, sometimes it's good to take a look at those as an indicator on when to sell, right? So sometimes if the RSI is above 70 or more, that may be a good time to sell. And it's another thing to consider. So overall, what I want you guys to take away from this is that there's lots of different options you can do here. The key though for me is you don't want to sell a very good company too early. So it's better, a lot of people, they sell it and then the company just keeps growing and growing, like say Walmart, for example, right? People who got in early at Walmart, they could have just held it and rode it for 50 years, but they sold out of it, and and then you have to find something else. So a lot of different variables going on here, but hopefully this video will show you some of the different things to consider when to sell a stock, and will help you in your investing journey. Okay, so thanks for watching, guys, and if you have any questions, just submit them in the comments below, and be sure to like and subscribe, and we'll see you on the next video.